get ready for an information explosion. The crypto world never sleeps, and neither do we. We're diving headfirst into the most electrifying developments that are shaking up the market right now. From massive capital shifts to intricate financial strategies and global digital currency plays, if you want to stay ahead, you need to be locked in. We've got the pulse of the market, breaking down the moves that matter and the trends that are defining tomorrow. Don't miss a second of this rapid-fire update. Your ultimate guide to what's hot and what's next is right here, right now. First up, we're tracking a colossal movement of funds that has the entire market buzzing. We're talking about major players shifting significant capital, and it could signal a major rotation in the crypto landscape. What does this mean for your portfolio? Then, we're dissecting a fascinating financial maneuver that involves a major company expanding its crypto treasury. This isn't just about holding assets. It's a strategic play that could reshape how businesses approach long-term value creation. We'll break down the why and the how. And finally, we're looking at the global stage, where big nations are making bold moves in the digital currency arena. It's a fascinating counterplay that could have ripple effects worldwide. Stick around because you won't want to miss a single beat of this action-packed crypto rundown. Make sure you're subscribed and the notification bell is on so you never miss an update. Whales dive deep into Ethereum as capital flees Bitcoin. Prepare for a seismic shift in the crypto market, as a massive wave of capital is reportedly flowing out of Bitcoin and into Ethereum, signaling a significant rotation towards altcoins with high growth potential. This isn't just a minor fluctuation. We're witnessing major cryptocurrency investors, often dubbed whales due to their substantial holdings, accumulating Ethereum ETH at an accelerated pace. Blockchain data reveals that 9 whale addresses, identified as significant players, have been actively purchasing Ether from major exchanges like BitGo and Galaxy Digital in recent weeks. This strategic move is seen as a clear indicator of a broader market trend where investors are looking to lock in Bitcoin profits and reallocate those funds into altcoins, with a particular focus on Ethereum. Analysts are calling this an organic rotation in investor sentiment, driven by the search for new opportunities and potentially higher returns beyond the dominance of Bitcoin. Nikolai Sondergaard, a research analyst at Nansen, commented on this trend, stating that capital flows are increasingly diversifying beyond Bitcoin. He noted, "The growing demand for Ether from whale investors indicates that the market is moving toward a more diversified allocation." This sentiment is echoed by other prominent crypto analysts, including Willy Woo, who has observed that Ether's daily inflows are now rivaling those of Bitcoin. A particularly striking example of this capital rotation involves a Bitcoin whale that manages over $11 billion in assets. This whale reportedly sold a staggering $2.59 billion worth of Bitcoin, converting it into $2.2 billion in Ethereum spot positions and a $577 million Ethereum perpetual long position on Hyperliquid. This whale also closed a profitable $450 million long position, securing a substantial profit and reinvesting a portion into Ethereum. This trend is further bolstered by the actions of corporate treasuries, such as Bitmine Immersion Technologies and BTCS, which have been aggressively accumulating Ethereum. Their on-chain balances for ETH have now surpassed the $10 billion mark, demonstrating significant institutional confidence. Data from Nansen also indicates that smart money traders, those typically achieving the highest returns, are already rotating into various altcoins, including Chainlink Link, Ethena ENA, and Lido DAO LDO. This suggests a growing anticipation of an altcoin season in 2025, as investors position themselves for potentially greater gains outside the established Bitcoin market. Analysts like Gracie Chen of BitGet have highlighted Ethereum's recent outperformance, noting that ETH has seen a 25% price surge in the past month, while Bitcoin experienced a 5.3% correction. This resilience is partly attributed to institutional inflows from ETFs and positive macroeconomic cues, such as dovish remarks from Federal Reserve Chair Jerome Powell, which have boosted overall risk appetite in the crypto markets. Looking ahead, the continued strong inflows into Ethereum, coupled with its robust network upgrades and expanding decentralized finance, DeFi ecosystem, position it as a prime target for both institutional and whale investors. While Bitcoin might be consolidating, Ethereum is capturing significant attention as a major driver of capital flows and market sentiment. Projections suggest that Ether could potentially reach $5,500 to $6,000 in the coming months, fueled by this sustained institutional buying and a broader strategic shift in investor asset allocation. But is this a temporary blip or a fundamental market realignment? Next, we're diving into the volatility that's gripping Bitcoin itself, as leverage unwinds and liquidations paint a picture of a fragile recovery. Bitcoin's price wobbles as leverage unwinds amidst market uncertainty. Bitcoin is experiencing a period of significant price fluctuation, with traders closely watching upcoming economic indicators and corporate earnings reports that could dictate the cryptocurrency's short-term trajectory. The recent rebound in Bitcoin's price, pushing it back above the $110,000 mark, is occurring against a backdrop of substantial liquidation events across the crypto derivatives market. Over 3,639 traders globally saw their positions forcibly closed within a 24-hour period, with a total value of approximately $29.79 million being liquidated. This indicates a highly leveraged and volatile market environment where sharp price movements can lead to cascading liquidations. The largest single liquidation event involved the AUX-BTC pair, amounting to over $1.1 million, highlighting the extreme risks associated with leveraged trading in the current market. Market analysts suggest that these liquidation patterns often serve as contrarian indicators, potentially signaling an impending price reversal. When a significant number of traders are heavily positioned in one direction, particularly with short positions, a sudden upward move can force these traders to exit, creating buying pressure that further fuels the rally. In Bitcoin's case, the high volume of short liquidations might be contributing to the current bounce, suggesting a temporary reprieve for leveraged longs. This dynamic is crucial for understanding the fragility of the current recovery, as it relies heavily on the unwinding of these leveraged bets rather than purely organic buying demand. Beyond Bitcoin, the altcoin market is also showing signs of diversification, with specific cryptocurrencies like CRO and JTO outperforming. This suggests that investors are actively seeking opportunities beyond the market leader, potentially seeking higher returns or diversifying their risk exposure amidst broader market uncertainty. These altcoins are attracting interest as investors look to capitalize on sector-specific developments and speculative opportunities, though their performance remains closely tied to the overall market sentiment and macroeconomic factors. The broader implications of these liquidation events underscore the increasing influence of derivatives markets on cryptocurrency valuations. Leverage, while a tool for amplifying potential gains, also magnifies risks, making leveraged positions particularly vulnerable to sudden market shifts. The interplay between retail and institutional traders in these derivatives markets is a key factor in maintaining market stability. High liquidation volumes can lead to increased volatility, but they can also present opportunities for astute traders who can interpret these signals correctly. As the market anticipates Nvidia's earnings report, there's a keen awareness of potential cross-market influences. Strong performance in the tech and AI sectors has historically correlated with increased risk-on sentiment, which can translate into greater capital flows into high-beta assets like cryptocurrencies. The coming days will be critical in determining whether Bitcoin's current rebound is a sustainable recovery trend or merely a short-term correction within a larger bearish movement. The market will be closely watching how these macroeconomic cues and corporate events interact with the ongoing deleveraging process in the crypto derivatives space. While the market grapples with leverage, a significant corporate treasury strategy is unfolding. Next, we're examining a major company's bold move to expand its Bitcoin holdings, a strategic play for long-term value creation. Sequans unveils ambitious $200 million Bitcoin treasury expansion, a dual-asset strategy for long-term value creation. A significant corporate treasury move is making waves as Sequans announces a substantial expansion of its Bitcoin holdings, signaling a strategic commitment to a dual-asset approach for future value creation. Sequans, a prominent player in its industry, has revealed plans to allocate an additional $200 million towards expanding its Bitcoin treasury. This decision marks a significant step beyond traditional treasury management, reflecting a growing trend among forward-thinking companies to diversify their corporate reserves into digital assets. The company's strategy is rooted in the belief that Bitcoin, as a decentralized store of value and a potential hedge against inflation, offers a unique opportunity for long-term capital appreciation. By integrating Bitcoin into its treasury, Sequans aims to enhance its financial resilience and capture potential upside from the burgeoning digital asset market. This expansion is not merely about increasing exposure to Bitcoin. It represents a carefully considered dual-asset strategy. While details on the specific allocation of other assets within their treasury remain undisclosed, the emphasis on Bitcoin suggests a conviction in its long-term viability. Companies adopting similar strategies often cite Bitcoin's limited supply, its increasing institutional adoption, and its growing role in the global financial narrative as key drivers. The move is also seen as a proactive measure to adapt to evolving financial landscapes, where digital assets are becoming increasingly integrated into mainstream investment portfolios. The company's leadership has emphasized that this decision is part of a broader vision to position Sequans for sustained growth and financial innovation in the coming years. The rationale behind such a significant corporate investment in Bitcoin often stems from a combination of factors. Firstly, the potential for capital appreciation is a major draw, especially given Bitcoin's historical performance and its increasing acceptance as a legitimate asset class. Secondly, companies are increasingly viewing Bitcoin as a hedge against currency devaluation and macroeconomic uncertainty, similar to how gold has traditionally been perceived. The decentralized nature of Bitcoin and its independence from traditional financial systems offer a unique form of diversification. Furthermore, the growing number of institutional investors, including asset managers and publicly traded companies, adding Bitcoin to their balance sheets, lends credibility and reduces the perceived risk for other corporations considering similar moves. While the direct impact on Sequans' day-to-day operations might not be immediately apparent, the strategic decision to bolster its Bitcoin treasury carries significant implications for its long-term financial health and market perception. It signals a proactive approach to financial management, embracing innovation and adapting to the changing dynamics of global finance. The company's move could also inspire other corporations to reassess their own treasury strategies, potentially accelerating the trend of corporate adoption of digital assets. Analysts are closely watching how this strategy unfolds, anticipating that it could set a precedent for how businesses approach asset diversification in the digital age, particularly in how it influences their approach to risk management and long-term value creation. This corporate treasury move is happening alongside significant geopolitical plays in the digital currency space. Next, we're shifting focus to the global stage, examining how major economies are navigating the rise of digital currencies and the implications for Bitcoin's future. Bitcoin's bull run potential tied to Fed policy and China's digital yuan ambitions. Bitcoin's trajectory towards new all-time highs in 2025 appears increasingly likely, driven by evolving central bank policies and a growing digital currency rivalry between major global powers. Positive developments in monetary policy and a confluence of favorable technical indicators suggest that the Bitcoin market is exceptionally well-positioned to achieve new trading highs in the latter half of 2025. Industry experts, including Nathan Batchelor of Beyond, highlight that a combination of regulatory clarity, escalating institutional interest, and supportive macroeconomic trends has created an ideal environment for Bitcoin to break free from its prolonged consolidation phase and embark on a new bullish cycle. The anticipation of a U.S. Federal Reserve rate cut, with market probabilities for a September 2025 reduction standing at a high 87%, is a key catalyst. This shift in monetary policy, signaled by Federal Reserve Chair Jerome Powell's comments, is expected to lower the cost of capital, making alternative assets like Bitcoin more attractive and potentially driving significant inflows into the cryptocurrency market. Complementing these domestic policy shifts is the global evolution of digital finance, particularly the growth of stablecoins. The U.S. Genius Act, which aims to establish a federal framework for dollar-backed stablecoins, is poised to facilitate their use in cross-border transactions and broader digital finance applications. Industry forecasts predict a substantial expansion of dollar-backed stablecoins to $1.75 trillion by 2028. This growth is critical for the Bitcoin ecosystem, as stablecoins serve as a vital on-ramp for capital entering and exiting the crypto market, potentially boosting liquidity and enabling more sophisticated trading strategies. However, this digital monetary landscape is also becoming a geopolitical battleground. China has voiced concerns over the proliferation of dollar-backed stablecoins, viewing them as a potential challenge to its monetary sovereignty. In response, Beijing is accelerating its digital Yuan e-CNY initiatives and exploring the launch of Yuan-backed stablecoins, potentially through Hong Kong. While the e-CNY has faced hurdles in domestic adoption, the introduction of offshore renminbi stablecoins could serve as a strategic avenue for China to test and refine its digital currency strategy while navigating its capital controls. This strategic maneuvering highlights a broader global effort to maintain financial autonomy amidst the rise of digital currencies. The influence of high-profile actors on the adoption and perception of crypto assets is also noteworthy. The Trump family's increasing exposure to digital assets, with 40% of their estimated $2.9 billion net worth now allocated to crypto, underscores the growing financial and geopolitical significance of these assets. Eric Trump's involvement in Hong Kong's crypto ecosystem, for instance, illustrates how personal financial decisions can intersect with international financial dynamics. China's leverage over Hong Kong-based crypto exchanges and its capacity to manage liquidity in the digital asset market could provide it with influence over such high-net-worth individuals, adding another layer of complexity to the global crypto landscape. Looking forward, Bitcoin appears well-positioned to benefit from a combination of favorable economic conditions, regulatory progress, and increasing institutional adoption. Nonetheless, it must also navigate the geopolitical tensions and regulatory challenges inherent in the evolving digital finance world. As central bank digital currencies, CBDCs and stablecoins continue to reshape global monetary systems, Bitcoin's unique role as a decentralized store of value and a hedge against fiat currency instability is likely to gain prominence. The sustainability of Bitcoin's upward trend will depend not only on its intrinsic market dynamics, but also on its ability to adapt to and thrive within the broader shifts in global monetary policy and digital innovation. These global digital currency plays add a fascinating geopolitical layer to market movements. Now, let's bring it all together with a quick recap and a look at what's next. And that's a wrap on today's essential updates. We saw whales making massive shifts from Bitcoin to Ethereum, signaling a potential altcoin season. Then, Bitcoin's price action was dominated by massive liquidations, showing a fragile recovery ahead of key earnings. We also covered Sequans' bold $200 million Bitcoin Treasury expansion, a strategic move for long-term value. Finally, we explored how Fed policy and China's digital yuan plans are shaping Bitcoin's future bull run. Don't forget to smash that like button, subscribe for more market-moving news, ring the notification bell so you never miss an update, and let us know your thoughts in the comments below. You can also follow us on all our social media channels for real-time updates. We'll see you in the next one.